U GRO Capital, they've seen strong AUM growth in the quarter gone by. The operating profit, along with the profit after tax, has also gone up on a year-on-year basis. To discuss these numbers, we have with us Shachindra Nath, the founder and managing director at U GRO Capital. Thank you very much for joining in. There is some concern about stress emerging in the MFI industry at large. I'm not talking about your company in particular, but in the industry, inflation is hurting the rural markets. There is distress, and the worry is that maybe collections will dip in FY25. So as we begin this new fiscal year, what can you guide in terms of the AUM growth, in terms of what the credit cost is going to be, what the asset quality is going to be for your company?
Yeah, as far as U GRO is concerned, as you know, we are India's dedicated MSME financing company. Our target customer segment are custom businesses which are between the trading turnover of 15 lakh to 15 crore. We continue to believe that the level of digitization and formalization happening for this segment of the market of MSME is very, very strong. The adoption of GST, the digitization, and the resilience is very strong. So we continue to believe not only the credit gap continues to be very, very large, 90 lakh plus crore, and this is 90% of that credit gap belongs to this customer segment. We are quite bullish. Our infrastructure is very strong. Last 3 years, we have added almost 3,000 odd crore of AUM to our book. We continue to believe that we are now expanding our micro network from 100 location. We are now going to 250 plus location this year, 400 location next year. So AUM growth may be in the same range, but our return on asset would move in next 8 to 9 quarters from 2.5% to almost 4%. And so as return on equity. What we are also seeing is the co-lending, because there is a general belief that bank lending to NBFC is slowing down. But for NBFC, which are focused on MSME, that is not true. And also we are seeing a renewed level of interest from multiple bank and now even private sector bank to partner with us. So the co-lending or off-balance sheet, which is currently at 47%, would go up to 50 odd percent, which is our target, which will improve our ROEs as well. So overall, we are very, very bullish. We think that policy continuity and the same government coming back, and given that this government has focused very heavily on MSME, even if you look at their what they have said with respect to Mudra and other loans, I think the MSME economy would do fairly well.
So you had about a 49% AUM growth last year in FY24. Will you be able to sustain that kind of a run rate? Because you've done some fundraise too.
We have not done some fundraise at a capital of 1,450 crore. We did almost 1,330 crore of new equity capital. It was a very large capital which we raised. For the first time, as you know, we are India's first listed startup. We raised almost 950 crore from 4P investors in 2018. Then we raised 340 crore from Denmark government IFU in 2023. And we have now done a CCD plus warrant wherein one of our existing investors put 500 crore and diversified set of large family offices in India put capital into this. So our capital base is ready or support our growth for next 2.5 years very easily. So as I said that in percentage term, not in percentage term, but we would add more than 3,000 crore what we have added in last 3 years. But the incremental addition to our AUM is on a higher yielding side. So all of our incremental AUM is in the range of 18 to 20% yield, which is coming from our micro enterprises segment. And that is what would push our blended portfolio yield by 150 basis point in 8 to 9 quarters, would increase our ROA by almost 150 basis point.
Okay. So some sense on how much you're expecting to grow the book? I mean, you're at about 9,000 crores right now, Mr. Nath. So if you could give us some guidance, I mean, what's the target for this year and maybe a roadmap for the next 2-3 years?
Yes. So as I was saying that our base capacity is to grow by 3,000 crore every year. Given that we are now adding almost 150 plus location this year, the 3,000 crore should be higher. So we should be in the range of 13,000-14,000 crore. And our target to end 26 with our aspirational number of somewhere near about 20,000 crore, we still continue to hold on to that. This is a function of the liability flow, more or less. Our base infrastructure on asset side is very, very robust. But as you know, we are dependent upon overall liability flow. So because the bank lending to NBFC have slowed down, RBI have raised concern, not with us, but overall bank lending to NBFC Fortunately for us, because we have a diversified liability side, we continue to maintain the same growth level. But we continue to believe that in 6 to 8 months' time, this flow of liability would increase, and so as increase will our AUM.
Yeah, good you brought up that point because we wanted to understand how cost of funds is moving. Right now, our colleague tells us that I think the calculated NIM is still higher. It's higher sequentially, it's even higher year on year. If you could give us the exact number, where are you on the net interest margin at the end of Q4? And how is the cost of funds moving? What's the expectation here on NIMs?
So this is the bridge. We are saying, or we are guiding that in 8 to 9 quarters, from a 2.5% return on asset, we should, because our base OPEX is all built out, we should be at a 4% return on asset. We are expecting 150 basis point portfolio yield increase. We are expecting 75 basis point cost of borrowing go down. We are expecting our credit cost to go up by half a basis point just because of the portfolio maturity, and a half a basis point of our OPEX, to income ratio, or, operating leverage would come. So we are expecting both because of our size, vintage, our cost of borrowing, and also hopefully the cycle would change, our cost of borrowing to go down by at least 75 basis point sequentially in few quarters.
I mean, net interest margin at 9%, 9.5%. Can you give us a band?
Yes, so I think the calculation of NIM in our case is little, tricky, because half of our income come from the co-lending. So which is doesn't show up in the net interest margin, it comes as a fees. But our NIM would improve by, because our yield are increasing by 150 basis point. So our NIM should also increase by same margin.
Okay, thank you very much for joining in.